Hey there, YouTube family. Stocks with Josh here. I'm driving from sunny San Diego up to Los Angeles to meet up with Larry Jones for a conference. But I'm checking in with you guys. I'm not going to leave you this week, even though I'm busy and traveling. Hit that like, say hi in the comment section for me. I know that car videos while driving are not safe. This is the best I can do. I've got a nice, beautiful stretch of highway ahead of me, so I'm being safe. I want to comment that we are seeing the markets develop a trend. I talked with you guys yesterday about the SPX, that it's going into what I'm seeing is a compression. So whenever things go into compression, the price, and that is defined by the price action tightening up. That's compression, okay? Then it always leads to an expansion. It breaks out dramatically. Now it can break out up or it can break down dramatically. Yet, so we got down right above our June lows, which on the SPX was 36.36. And we got down and we sort of kissed it and we backed off. And Monday was sort of a nothing day. We went up in the morning, but by the end of the day, we came down. We've done the same exact thing today. One of you guys commented to me a moment ago in the MooMoo community. It was Ellen23, and she said, "Hey Josh, the XPX went down to a low of 36.23, but then it came back up and it closed at 36.47." And you have to, and I love that because it really excited me because she understands what the point I made yesterday. The market action during the day is not what defines the next move. It's how the day closes. And we still did not get that close on the S&P 500 measured by the SPX below 36.36. And so all that happened was the price came down just a little bit more closer to that 36.36. I'm going to characterize all of this as compression, and it's telling us that there's going to be a very strong and decisive move coming very soon. Now, I have my eyes and ears out amongst a lot of other analysts and traders and day traders that I think very highly of, and most of them are commenting to me that they have taken hedge positions. I talked with you guys about hedging positions, which is basically if you're long stock, let's say Google, you're long, you own a lot of it, right? You could buy a short-term put, right, to protect your position in Google. And so what that would look like is if the markets dropped dramatically, that would be profitable. But if they didn't drop dramatically and quickly, then it would expire worthless. But it's like stock insurance. I also commented to you guys a while back that the smart money had taken out a record level of, we'll call it put insurance on all of their long plays, that we had $8 billion worth of put options purchased right before this recent leg down, compared to only $1 billion of call options, which would be bullish. Call options are bullish and the put options are bearish. Now, they weren't buying that necessarily because they believed it was going down. A lot of people speculated that they were buying it because they believed they were taking out insurance on the stocks that they owned, with the hope that that would expire worthless. The market seems to be setting up for a potential bull run, but none of us can see that and know that perfectly. All that we can do is look at the fact that we are oversold on a lot of the indicators and that there could easily be a pop to the upside. Now, let's take a step back and look at the first two days of this week, and neither one of them have given us a concisive and clear direction. We've only seen a compressing occurring, which means that a dramatic move is coming very soon, and we're going to have to figure out what that move is going to be. At the moment, I am actually leaning slightly bullish because of the technicals, but it would take very little for these markets to go down. Even if we did get a push up, a bullish run, I would absolutely characterize that. What I do feel safe to say about it is that it would be a bear rally. We're not stopping here and going all the way back to our all-time highs. That seems very unlikely. There's too much risk currently in the system. But the market just doesn't go straight down. We had a really large drop from the recent highs that we had, and it's come down all the way to the June lows, and it would not be unrealistic at all if we got a bounce at this point. And so today I actually entered back into some of those call options that I had on BABA and Norwegian Cruise Lines, and so I'm sort of vacillating, and I'm leaning. Monday felt bearish to me because it really wasn't a pop that I was hoping for. But today, the fact that we again didn't decisively move down means perhaps to me that the market is slowing down on the idea of moving down. And so there could be an opportunity to the upside, and that's how I position myself today. All right, the next topic is Norwegian Cruise Lines. Norwegian Cruise Lines had a pretty nice day today. That's ticker NCLH. They closed back up above $14. They moved up a little bit after hours as well. And Morningstar has put out a overview of Norwegian Cruise Lines, saying that their 2023 profit looks robust. They're basically saying that this company has had a lot of headwind in the last couple years, but they're beginning to identify and point people towards the profitability that's ahead. And the other big dynamic that they pointed to is that demand has not been slowing, but demand has been increasing. And so there is a lot of risks in trading Norwegian Cruise Lines. If we broke this $12.50 range dramatically and closed beneath it, I think it's very likely that the downside risk for Norwegian Cruise Lines would be all the way back to $8. And I said this before in a video, and I'm just going to repeat it. If we did break down, I would get out of my Norwegian Cruise Line trade entirely. Okay, I would not be a bag holder for the stock, but I would absolutely position the money that I had left as well as new money back into Norwegian after it came down to below the $9 to $8 range. I would absolutely be buying. I believe that this stock is going to be a turnaround play. And I believe that just like Morningstar analysts said, I think 2023 is going to be great and profitable. I want to quickly go back and tell you guys a story. It's kind of a COVID story. It's about Spanish flu back in 1918. It's kind of ironic that America faced this COVID crisis in the year 2020. And back in 1918, so 100 years ago, the Spanish flu, which had killed 1 million people globally, it really dramatically shut down the economy in the U.S. People were wearing masks, and they were not allowed to basically congregate, go to baseball games. It was a nationwide event, and it caused a lot of people to be separated, no differently than COVID did. And after the Spanish flu had passed, we had what was known as the Roaring 20s, and we had it for a decade, which meant that people were just, excited to get back to business, excited to make money, excited to get together, excited to go on vacations and to travel. And so we had this boom that occurred for a decade after the Spanish flu. And so there's a lot of economists that have talked about the correlation that we might be in. The fact is that the can of a major breakdown in our recession could easily be kicked down the road another decade. We may get, obviously, a drop down here, but we also might be setting up for a decade-long roaring 20 to 2030, right? 2030 could be a time frame in which the market ultimately crashes. So nobody knows how far down the road that the problems in the American dollar and in the economy and the world might get kicked. But what could be happening is companies like Norwegian Cruise Lines could be absolutely well positioned to be the big recipients of a lot of people that had been secluded, isolated, working from home, and now they want to get out. Now that they feel safe and comfortable, now they want to go on cruises more than they ever did before. And so I think we don't want to be sleeping on this particular play. There is a lot of risks associated with it, but I just wanted to give you guys my premise or my idea why I think that down at these numbers, it's a stock that's interesting. And we could absolutely get all the way back up to $30, $35 on Norwegian Cruise Lines. Right now, my immediate target is $16 to $17. I would cash out my Norwegian Cruise Line options for over 100% profit at that point and be very pleased. I'd be looking for another dip in the cycle of the stock. But that's a little bit of what I'm doing with Norwegian Cruise Line. If you are new to these markets, there's actually an incredible opportunity to be getting in at a very discounted price. As I said to you guys in yesterday's video, there is actually less room to the downside than there is opportunity to the upside. The risk to reward has flipped. So there's possibly a 10 or 12% leg down from where we're at, but there's a good 24 to 25% move back up. And so you're really not going to go terribly long if you're investing in quality stocks right now. If you're investing and you have a longer term horizon or view, this is actually a good time to buy. It's a good time to be putting money to work weekly. You know, I'm a massive advocate of weekly timed investments. I love picking up crypto, my favorite cryptos, and I don't concern myself whether they're not at the very bottom. I'm just happy to be buying and filling up my bags, knowing that we're in the bear winter and that in the coming 2 years, I could see a 4, 5, 6, or 10x in those investments. And there's a lot of great companies that would build a great base to your overall investment portfolio that are available on the cheap, 30% down from their all-time highs right now. Companies like Google, companies like PayPal, Microsoft, Disney. I love all those names, Coca-Cola and Walmart. Those, in my opinion, are absolutely buyable right now. Not for a swing trade, but they're buyable to invest in your portfolio for a longer-term return. Okay, if you guys need an exchange, it's also a great time to get an exchange. MooMoo is offering an unbelievable deal. You're getting up to 15 free stock. Each one of them has the opportunity of being worth $2,000, so that ultimately, just for opening and funding your account, you could win $30,000. If you put in just $100, you can get 6 stocks that are worth $2,000 each, up to. That is their best offer to date. I also use Webull for my long-term value investing because they have the set it and forget it fractional share buying. But the other really big reason to join MooMoo is to find me over there. I've got a growing community where I'm able to interact with you guys via text without the spam, without the scam artists trying to get you to WhatsApp, Instagram, and Telegram them to get a hold of me. That's not me. So YouTube has a big problem with their bots and their scammers, but over on MooMoo, it's clean. There's no bots, there's no scammers. We can actually have a text message conversation. I try to interact with as many of you guys as I can. Often when it's late at night and I should be sleeping, I'm there chatting and texting with you, doing the best I can to stay connected and give you guys value. If you like what I've been doing and you like this page, then do me a favor, hit the like, hit the subscribe, the notification bell, and follow me along on my journey. We're trading. I'm going out on a limb. I give you guys my trades. Not all my trades are going to succeed. We've had a number of very successful trades in the last couple months. I have made over 100% and up to 300% on a number of the trades that I've talked with you guys about on this channel. So if you'd like to participate in that, not everyone's going to be a winner, but I'm going to give them to you. I'm going to let you know what I'm doing. Then hit the subscribe and the notification bell and join me. I will talk to you guys some more tomorrow, bringing you guys actionable information on stocks and plays and crypto. Until then, peace and blessings, my friends. I'll see you tomorrow. Take care.